So we're back for another installment of the dividend portfolio. Just about started, kind of. We've got a couple more to buy at some point in the next couple of months. However, it is earnings season. We need to talk about it. As you can see, we're currently on Thursday. A couple of things have happened. We need to talk about those. But yeah, if you're new and if you're not used to me talking about the stock market, well, here we go. Every 2 weeks I'll be looking to do it just to kind of vary the content a little bit. So if you want to follow along, you can hit the subscribe button, and we're going to try and build a portfolio over a period of years. Not a quick rich thing. Put money in, watch the returns come in eventually over time, right? So it kind of looks obvious on the screen. We've got earnings. The next couple of weeks will be all governed by that. So first thing I want to talk about is the fact that Apple are still tickling their toes into AI. Seems like they were a little bit slow in terms of the uptake of it, with obviously what happened with Bing, ChatGPT, Google, etc. But they are developing a Apple GPT, which could be interesting. Now, the title of this video suggests melt up. I'm going to explain reasons why that is a possibility, looking at the likes of Apple as a potential element of growth, because it could go even higher. It is at all-time highs. It is the most valuable stock. A good earning season may be pretty good, but as you can see, Apple is quietly working on artificial intelligence tools that could challenge those at OpenAI. So yeah, whether this takes off or not, don't know. Whether earnings are good or not, I don't know. We'll see in the next coming months, but it could be an interesting couple of years for technology if AI is implemented in the ways that they want it. Anyways, let's talk about Netflix, the most obvious thing in the room. Now, there has been a few issues with two things here. Yes, they've made some more users come on board. However, there's probably a reason for that. Password sharing. So as you can see here, this is the most obvious. So quarter revenue fell short. Password crackdowns. New advertising tier. So the new advertising tier was brought out to be a cheaper model to allow people to buy in cheaper. And obviously the password sharing would suggest that people are making extra accounts, right? For obvious kind of reasons. But they have fallen down. So the shares actually fallen down by 10%. And the stock has risen 62% over the course of the year due to optimism surrounding those incentives. Now, I don't see it as an incentive to buy something with advertising. It just doesn't make sense. I'm looking for things to buy to get rid of advertising, let's be honest here. Like, happily buy YouTube Premium for the no advertising. I think Netflix should just be more affordable and be more understanding with their customer base to allow password sharing. I'm all for misuse of passwords and get rid of that, but if you've been given permission to use it, whether there's a new system in place to allow like an authorization for a month to use that account, I think that'd be a better idea than cracking people off completely. But yeah, we'll see how things go. But their user base seems to be going up and down due to changes. So I don't think the prices are liking it that much. Moving on to another obvious one is Tesla. Earnings came out and you can see here they missed the margins, and yeah, money's going into the new Cybertruck, which I think's hideous, but hey, what it is. I wouldn't like to get hit by one, Christ. So margins shrinking, piling money into new technology, yeah, and they're also reducing their prices. They're trying to reduce the prices massively of electrical vehicles to kind of, usurp competition essentially. But whether that works or not, I don't know. The way I see it, Tesla's got a really decent model in terms of some certain cars, but I think going a bit too far is a bit of a stretch essentially with their bold designs essentially. But we'll see how things do go. Anyways, let's talk about what is genuinely happening, right? So mentioned it at the start of the video, a melt up. Now, this is the S&P, even though some things have been missing. We're still rallying hard. Now, this is a weekly time frame. It's looking relatively decent. But that's the thing. We're at levels of resistance. Where can we go? Now, we're not that far away from going to all-time highs, which is crazy when you think about the economy and all the negative effect that we've had over the course of the last 2 years, essentially, right? Now, there's a couple of reasonings for that. Obviously, look at Apple, mentioned it before. Wow, it's crazy. Maybe a strong earnings, maybe more AI information may well bring that optimism even higher. and we may start getting into the realms of melt-ups. A melt-up is a sustained and often unexpected movement in investment performance or an asset, partly driven by a stampede of investors. Funny that. Who don't want to miss out on the rise. Now, we all know through my normal channel of me talking about cryptocurrency, people get involved in hype. It happens in this market too. It's just not as common because people have a little bit more control. But people like to buy things that are nice and green and looking good. This is why I like to buy certain things that are not looking very good and low so I can make money eventually, right? So when we look at the likes of this, cool. When we look at the likes of Microsoft as well, huge. Even Coca-Cola is still at these stupid levels. Crazy, right? So a melt-up technically, when you're looking at the likes of the NASDAQ, when we're looking at the likes of the S&P, isn't that much off, in my opinion, off the table. Realistically, that could genuinely happen. So it's interesting to see where we are right now. So, oh, okay, cool. Low inflation, high interest rates. Why is the market still going mental? It just is. So yeah, it's crazy. Anyway, shall we look at how our portfolio has been doing? I think we should, because it's been an all right couple of weeks. Now, I'll be the first to admit I don't have much in here. Sorry. It will though. In the next couple of months, it will get belt fed in. If you don't know this, I'm moving house soon, so my money's tied up. Can't really move it realistically. Can't really throw money around, unfortunately, due to anti-money laundering laws, because I can't put more than £3,000 as a transaction, moving it around. Don't know why. Just can't do it. Pain in the ass. But got a little bit in here. I am looking to add maybe 3 more stocks to increase the passive income of it, because it is, you know, I've just gone for solid stuff. Solid stuff, as well as a little crypto portfolio, little side bit on it, which has been the best performer of this portfolio by far, right? So that's the reason why it's doing so well, is mainly because the bulk of it is actually Coinbase and Riot. Coinbase, as you know, custodians potentially for a lot of the ETFs, potentially come into the Bitcoin market, huge. And you've got Riot. Riot is mining of Bitcoin in the US. And Vanguard have bought a 10% stake in it. Pretty good, right? So I am looking to buy more dollar cost average in, and you can see the performance of them. Now, a lot of these assets realistically are built for dividends. Strong, solid assets with dividend growth, growing revenues. I've talked about in the previous video on this series what I'm looking at over time, so I can buy some solid companies that will eventually pay me even more in dividends every single year, which is nice, and it'll grow. So when we look at that as a principle, we need to add more. We need to add probably 2 or 3 more dividend stocks in other sectors, essentially, to increase the passive income, because that is pretty shit. But we all know this value is going to change too. So we are going to increase it massively, and we're hoping to get to a nice little sum per year, which would be quite nice. So I'm not looking for high dividend yield. I'm looking for consistent gains, but also value appreciation and a growing dividend yield, essentially, right? So with that being said, that will eventually grow over time as the account gets bigger and bigger, and it will snowball over years. So if you want to follow it, as I say, feel free to do so. If you want to join Patreon, I'm looking to do more stocks and share stuff in there. I will be doing a journal for this, so you can get what I'm buying, what I'm researching, what I'm looking at, all that kind of stuff before I do a YouTube video. So if you want to get like a little more of an inside view instead of just seeing the overall view, which is this video here, it will massively be helpful to you so you understand what I'm looking at. But a couple of these have not been doing as great as expected so far, but it's very, very early days. As you can see, there's only one that's in the red at the minute, which is Cohort, but it's not really moved much, to be fair. But overall, it is what it is. But as I say, this one and this one by far the best. The other ones have been doing very, very little and not really moving much, which is kind of what I want. I want a nice, steady portfolio, apart from these two, which are going to be crazy. And I will be selling them when cryptocurrency goes to the freaking moon. So yeah, if you're new around here, hit the subscribe button, hope you like, and yeah, I'll be back in a couple of weeks.